So I guess the first question I have for you, Tony and Jake, are you guys done with your Christmas shopping?
Not even close, Michael. What do you mean?
I haven't even started. Yeah, what are you talking about?
Jeez.
I already knew the answers to that. I just wanted to embarrass you in front of everybody listening.
No.
I actually have a couple of gifts already for my wife. And I just want everyone, I mean, that's pretty impressive for me. But I've also been married 21 years, and I've learned that when my wife says, oh, this is cool, I just buy it and have it sent to my office all year long. And then because my wife doesn't usually say that, she just doesn't care that much. Well, hey, everybody, thanks for joining our discussion about Christmas presents. And we're sure glad you're here. And we're going to give just another minute or so for people. I just see attendees joining on my screen here. So as everybody gets joined, we will dive in to our awesome discussion around what is happening in the world of politics. And then we'll do one of these on religion next week, and we'll just hit all the, high points that people love to talk about. Sound good?
It's like Thanksgiving all over again.
Yeah, Thanksgiving all over again. Again, everyone, thanks for joining. My name is Tony Julianelle. I'm on the leadership team here at Atlas Real Estate, and I'm joined by two of my favorite people in the world, Jacob Mueller, not to be confused with Mueller. Jacob Mueller, who is our regional manager in the Colorado Springs market and leads our brokerage team in Southern Colorado. And then by the infamous Mike Hills, or Michael Rutherford Hills, as he's often called. And Mike is our vice president of brokerage, manages multiple states, and oversees all of our brokerage business for Atlas Real Estate. So it's very exciting to have both of you here with me today. And we're going to spend a little bit of time talking about the election and what the impact of the election may or may not be on real estate as we look forward to 2021. A couple of things. First of all, our intent is not to be partisan in this discussion. Our intent is to attempt to look at reality and what we need to learn from what we already know, what we're going to be looking out for in the year ahead. And really, our goal is to help each of the clients that we serve navigate this, very fascinating time as well as we can. And so we'll hit on just some high points, and then we'll just open it up for questions. So I encourage you to go ahead and ask your questions. You can do that down at the bottom of your screen. There should be the opportunity for Q&A. And if you just click that button, you'll be able to type in a question, and we'll get to as many of those questions as we can. But before we open it up for Q&A, there's just some things that we know are hot topics that we want to dive into as we get started. And I think the first one, and probably the most pressing question that I've been asking everyone as we came through this election cycle really is, how did you vote, particularly on gray wolves in Colorado?
Tony, can I start with that? I mean, I voted for the gray wolves because they're cute and cuddly. And I mean, who doesn't like dogs? Because they're just dogs, right? And they help, and I want to see them when I'm out walking trails. I mean, don't you?
You're nuts. No, you're nuts. You're freaking nuts. After having lived in the mountains for a while, you're crazy. My wife been on runs, been chased by cougars multiple times. Not a good thing to have out there in the wild. We definitely voted against that, and I think you're crazy.
For the record, I didn't vote for it. I just thought it would be funny to say that they're cute and cuddly.
How good.
Who doesn't love puppies, right?
I just lost all respect for you. That's hilarious.
So fascinating things end up on the ballot in Colorado, don't they? In fact, that was one that was a heated debate in my home. Of course, my children think wolves are also cute and cuddly. And I grew up in a farm town, so you just take a little bit of a different perspective. So however you voted on the gray wolves are here, and they're here to stay. So let's dive into some other questions, though, that might be a little more interesting to our friends that are here to talk about real estate. And the big one really is the Gallagher Amendment. And this was a hot topic. There was quite a bit of money that was spent throughout the campaign cycle lobbying both sides of this. And I'm actually going to ask Jacob to give us just a quick overview, if you will, Jacob, of what is Gallagher and what happened in this ballot initiative.
Yeah, that's a great question. So the Gallagher Amendment was passed in the 80s in Colorado. And what it did is it essentially fixed the proportions of the tax rate between commercial real estate and residential real estate at 55 for commercial, 45 for residential. And what it did by doing that is they tied the assessment rate to that base valuation of 1980s without making plans for future changes in that ratio between commercial and residential values. When they did that, they put a fixed assessment rate on commercial property of 29%. And then the residential rate at the time was 21%. You know, it's pretty close, seemed fair at the time. However, the residential assessment rate could fluctuate in order to keep that base level the same. So over time, as Colorado has grown since the 80s, what we've seen happen is that residential tax assessment rate has gone down pretty dramatically because we've seen residential real estate values increase while commercial real estate values have stayed about the same. So that's the Gallagher Amendment.
Yeah, and Jacob, how does that, when you think about Colorado in comparison to other states, and we're deploying money on real assets in multiple states now, how does Colorado kind of rank when it comes to tax valuation or tax assessment?
Yeah, that's a great question. One of the reasons Colorado has been such a strong investing market for the residential markets, and to be clear, we should say, when we're talking about residential assessment rates, we're not just talking about single family. We're actually also talking about small multifamily and even apartment buildings. So it's important to understand that that falls in there. Mm-hmm. That being said, because of this Gallagher Amendment, Colorado has had some of the lowest tax rates for residential property in the country for a long time, actually. And it's even getting starker as we go. And so that's actually driven a lot of investment into Colorado.
And so what happened? There's a ballot initiative, repeal Gallagher. What happened on Super Tuesday?
Yeah, so the Gallagher Amendment actually got repealed. And so along with that repeal of that amendment to the Colorado Constitution, what they did is they actually added a moratorium on assessment rates for both residential and commercial property for 2021. So in this coming year, we're not going to see anything change in 2021. However, after that, we are likely to see changes occur. Well, what I would say is we're most likely to see ballot initiatives come up regularly after 2021 occurs. And that's due to another whole thing that we can get into called TABOR, and it has to do with taxpayer bill of rights, but I don't know if we want to go there yet or not.
Let's do it. Let's go there. Tell me why ballot initiatives are going to come up.
Yeah, so the reason why ballot initiatives are going to come up in Colorado is because we amended our state constitution through something called TABOR, which is the Taxpayer Bill of Rights. And essentially what TABOR says is that any kind of real tax rate to Colorado citizens has to go to a popular vote. It has to go to the ballot. Every Colorado citizen gets to voice their opinion on whether tax rates should go up. And because we're talking about assessment of real property, whether residential or commercial, whenever we want to increase that assessment rate from its current fixed rate of 29% for commercial, and I think it's 7.15 right now for residential, if we ever want to raise that, we have to put it on a ballot and go to a popular vote.
So then couldn't you, Jake, by based on that, saying that repealing of Gallagher doesn't actually change anything yet, because we repealed it, but in order to raise taxes, it would have to go back to a vote. So could Gallagher be repealed, which it was, but then it not change, the tax rates not change for a very long time, if ever?
That is correct. That is correct. It is a possibility that the tax rates will actually just stay where they are, 29% for commercial and 7.15% for residential. But even if that's true, what it did do by repealing the Gallagher Amendment is it prevented that residential tax rate from going lower, that assessment rate from going lower.
Gotcha.
So that's a great point, and I think often overlooked is that Gallagher required that balance between the two. as far as revenue generation goes, which was what was driving down the residential assessment rate over the last 2 decades. And so that has ended, right? Any continued decrease in the assessment rate has ended, even though most of us have seen, if we own property in Colorado, have seen our taxes go up slightly. They've gone up because of appreciation, not because the tax rate has gone up, and because they've been reassessed. So
that's correct. And what I would add here, Tony, is I actually wrote an article for ICOR on this. And my conclusion for all of our investor clients out there is, if you're wise and you're trying to, plan your cash further out ahead, what I would do is I would look at 2 consequences of the Gallagher Amendment and how I allocate my cash. First of all, I would allocate cash for higher gross tax dollars based on an increasing assessed value, which is what you're getting at, Tony, with the appreciation. But I would also set aside, I would earmark some of my free cash flow for the potential that those tax assessment rates might go up when it does go to the ballot. Mike, your point that it may not go up because Coloradans don't like tax increases, and we'll get to that. It is likely that the assessment rates won't go up. However, we have to plan for the worst when we're talking about our investing. We want to mitigate that risk, and so I would actually set aside some cash in case it goes up.
Well, and I would be willing to bet that as these amendments hit the ballot, it's not going to be major increases. It's going to be very minor so that they can get passed. And it's one of those things that this is how taxes work, right? You increase it in very small increments over time, because a 2% increment is way too big, but maybe a 0.25 increment isn't. So.
Yeah, I think you'll also see that those funds will be earmarked for particular uses. So what you'll see is on the ballot, you're going to see something like, hey, do you agree to raise our residential assessment rate from 7.15 to 7.22 and use the additional funds raised, estimated at X dollars, solely for the purpose of public education? I think you're going to see that the tax increases are going to be tied to a very specific civic benefit.
Yep, I would agree with that.
Which TABOR was intended to do, right? The idea of TABOR was if you're going to raise taxes, you're going to have to convince Coloradans to vote for this, meaning the rationale behind the increase has to be compelling. Mm-hmm. Jacob, you hit on a really important one, which is public education. And, I know, Jacob, you've lived in rural Colorado and as well as in the Front Range. And it is a hot topic in Colorado that many school systems are struggling. The weight of Gallagher was that school systems, particularly in smaller communities, had challenges around this, and they made up for it. Some of them did through other ballot initiatives and bond initiatives and those types of things. But when we hear, man, my taxes might go up on the residential doors that I own, that just sounds terrible. But what might make it not so terrible?
Yeah, that's a great point, Tony. I think we should talk about the fact that education is kind of the basis for a healthy economy. Ultimately, when we're talking about what drives real estate prices or even what drives our rent roll, what drives that is economic growth. And that economic growth is produced by people who are industrious and who are, educated and able to create things of value that we go and purchase. And so when we talk about education, we are talking about the long-term growth of a particular place. Now, there's a whole bunch of weird, wacky combinations of our education spending and TABOR in Colorado. I don't really want to get into the details of that because it's pretty complicated, but suffice it to say, Colorado messed up when we passed some of our constitutional amendments, and it's throttled our public education spending because it's made, tax dollars raised from real estate less than they really ought to be. And so what you kind of alluded to, Tony, what schools have been trying to do in order to survive is raising bonds or mill levies that are tied to their local community in order to acquire some of those funds that they need. But with the removal of the Gallagher Amendment, I think there's going to be more opportunity for schools to get the funding that they need.
It's really good. Mike, as you think about path of development, one of the main points in the Atlas thesis, and how you consider what appreciation is going to look like, how important is the school district?
So I'll give you a very specific example. We all know that DPS struggles. And inside DPS, Denver Public Schools, there are different school systems and communities. Let's take Cherry Creek Schools, for example. If I'm evaluating two very similar properties in Aurora, and one happens to sit in Aurora and it's Aurora Public Schools versus one sits in Cherry Creek Schools, I'm going to buy the Cherry Creek school system hands down every time over the Aurora Public Schools. And that's a very specific example that any Denverite would go, yeah, because I want to own in Cherry Creek Schools, because the residents that live in my properties, if they're not, they should be. And the good ones are looking at access to public transportation, access to highways, urban infill, hospitals. If you say Colfax to many Coloradans, they think of prostitution and drugs. Well, we've been buying close to the Anschutz Medical Center, the VA hospital, and Children's Colorado over off at 225 in Colfax for a very long time, because that creates urban infill and jobs, and schools are no different. If there's a new school going in, if there's a new college going in, it typically raises the bar of the entire community. And frankly, property tax plays into that. We want good schools because we want our children to be smart. I have 4 children that I want them to get the good education, and I want my residents my residents are just going to want to live in those schools where their children are going to have better opportunity. So going back to that original example, I would just say school districts really, really matter. It is absolutely one of the factors we look at when we're investing in real estate.
Yeah, I think it's really important. Sidebar, Mike, how are you going to pick which two get to go to college? Have you guys landed on what type of competition you'll run?
It's probably just the girls. The 2 girls get to go to school. The 2 boys don't. I think that's how it's going to go.
Jacob mentioned an article that he wrote for ICOR. That article, I don't believe has been published quite yet, but if you'd like a copy of it when it does publish, just go ahead and shoot us an email, and we'll be happy to send that out to everyone. We'll definitely share it in our various newsletter formats as well. All right, let's hit on another one. We did have another thing that happened in the election, and that was a change of senators for the state of Colorado. So Cory Gardner was defeated by previous mayor of Denver and governor of Colorado, John Hickenlooper. And I just love to get your guys' thoughts on what does that mean for Coloradans, and is there anything that we should be looking out for?
So I want to talk about 2 topics on this. And I find this curious because if you look, I've lived in Colorado now a little over 20 years. And from my understanding, and I don't have the vast knowledge or depth of knowledge of Colorado politics, because I moved here to go to college and have been here most of my adult life. But from my understanding, most of the time, the mayor of Denver did not become the governor of Colorado. And that has been a recent phenomenon the last 12 to 16 years. And population statistics would say it used to be that there was more rural Coloradans than there were Denverites. Now there's more than half of the population of the state lives in Denver. So the mayor of Denver gets voted for more in Denver than rural. So Denver almost controls the city politics, controls the state politics, which has seemed to happen. And now this is a broad sweeping statement, and no need to argue about it. That just seems what's happened, is that Denver voted in their mayor. He became the governor. Now he's become our senator. And that's curious because it just means that the city of Denver now looks like it has a major control of statewide politics, which I find interesting. Personally, I really like John Hickenlooper, very mild Democrat, businessman. I voted for Cory Gardner 6 years ago. But Hickenlooper is one of those guys that I did vote for this time because I do like him. Unfortunately, I voted for him because I like him as a person and as a politician. If you take national politics, especially in the Senate, the interesting thing about this is you hear this a lot, and it happened a lot in our presidential race. People didn't like one candidate or the other personally, so they voted the other side. And I think the mistake that we make as voters, and this is just my own personal opining on this, is that when we vote for one person, especially in the Senate, I voted for John Hickenlooper because I liked him. But the truth of the matter is John Hickenlooper is going to vote down party lines almost exclusively as a senator. He's a blue senator, therefore he's going to vote blue. So for me to say I voted for him because I like him, I should probably take into account the ideology of the party, because Hickenlooper is not going to vote the way Hickenlooper wants. He's going to vote the way the bills that his party passes that give to him. So it's just it's an interesting, in my own head, it's like, well, I don't know if I agree with all blue politics, but I like Hickenlooper, even though I know Hickenlooper is going to vote for whatever the Senate bill passes that are blue. So just, I find that curious, and what is your guys' take on that?
Yeah, I mean, I don't know. I don't know Hickenlooper personally, and I don't know if I would even agree with your statement that he'll vote down party lines, that he'll be whipped and be pretty much on board. He might be. I mean, that's most likely. However, I've seen Hickenlooper like change his mind on public policies before, and actually the main one that comes to mind is he's kind of shifted his ideology when it comes to legalizing marijuana. And when I look at that, I look at somebody who's actually able to change their mind, and that's actually a big deal for me, because it tells me that he's a reasonable person. He's willing to reason, like he's willing to, recognize the facts and change his position based on that. And I think what you'll see him in the Senate doing is actually being one of those seats that is on the table looking to compromise when there is bipartisan effort for a bill to go forward. I think Hickenlooper will be a part of that. I don't know that. That's pure speculation based on what I've seen him do, but
I hope you're right. I just find it interesting because I think normally you're right, but this Senate situation right now, it's 50 red, 48 blue, 2 seats up for election in a runoff in Georgia, and Kamala Harris is the tiebreaker vote. So I wouldn't, just statistically, I wouldn't be surprised if Georgia, one went red, one went blue, and it makes it 51-49. I find this is going to be fascinating, good, bad, or otherwise. It's going to be fascinating the way the next 4 years play out if you take a step back, take the emotion out of it and say, hey, what's going to happen? Because just for the record, while I did vote for Hickenlooper, I didn't vote for Biden, nor did I vote for Trump. I didn't vote for either. I actually wrote Tony Julianelle's name in, just for the record. I didn't vote for either one of those guys. So just if you guys want to know my mind, that is truly, I did not vote for either one of those men as president for various different reasons. And for Trump, because I don't like him personally. For Biden, which we're going to get to, because some of the tax policies that he was talking about directly affect real estate, myself and my clients. Yeah. And I couldn't support those tax, what he was saying that he was going to do. Not all of them, but there was a very few specific ones like, yep, can't do that. I cannot support those taxes. And we will get into that in a second. But it's an interesting thing. And I hope you're right about Hickenlooper. And I think you are. I really like him. I just think that if the Senate, both of those seats in Georgia go blue and it's 50-50, there's going to be a lot of pressure on every blue senator to vote exactly down party line, because they have no margin for error. And that will be a very interesting battle to watch.
Yeah, it's a good point. Before we move to the Biden tax plan, because that's a big topic for us today, there were a few other things that happened in Colorado. One was this, particularly in the city of Denver, which was I believe it was a 0.25% increase in the sales tax that was meant to assist with funding initiatives around homelessness in Denver. And I'd love to get your guys' thoughts on what's happening there. I mean, we see our first actual formal encampment or campsite in Congress Park, I believe, went live or is going live in the next few days. How do we think about this issue? In fact, as a anecdotal side point here, we had a transaction recently that one of our clients was looking at purchasing, and then upon inspection, you see all the photos and everything looks great, and then you go walk the property and you realize literally a half a block away is an encampment, and that really has an impact on value. So how should we be thinking about this? What does this look like in the near term and the long term, and how are you advising clients around this today?
Whew, this is a tough one. This is a really tough one, Tony, because I don't think, my humble opinion is that throwing money to a government to solve this problem is typically not the way I think we should handle things. And I don't think this is a homelessness, a housing issue. I wholeheartedly believe this is a mental health issue, and homelessness is so much mental health that, you know, and I don't know the detail of how that quarter point sales tax is going to get spent. I have a feeling, like everything else, it'll be bureaucratic and there'll be lots of waste. And I feel like the talk that I've heard is it centers on housing and not on mental health. And personally, I would like to see this addressed as a mental health need. And I mean, it's an issue. It's an issue in California right now. It's an issue it's becoming an issue in Denver. And we'll get into when we talk national politics, but there's a lot of Californians moving here that are influencing our Colorado local politics. And I don't trust them. I mean, look what they've done to their own cities. It's happening to our city now. And it's kind of frustrating. And as an investor, I'm looking at this saying, you know what, if I own property in downtown Denver, close to these homeless camps, it's only getting worse. I don't want to own downtown. I mean, I think it's going to hurt our urban core, our downtown core, if we don't get a handle on it.
Yeah, I mean, I think it's a really complicated issue. I think it's super complicated. You know, for me, when I think about this, and I haven't come across this, but my general plan or my philosophy, and I haven't actually enacted this, but my thought would be, as owners of rental real estate and our clients owners of rental real estate, if you find a tenant or have a tenant or a resident who's really struggling to pay rent or is struggling with some kind of life event that occurred, it seems to me that if we could somehow get those funds that are being added from the sales tax to provide services for that individual before they become homeless, before their mental illness drives them to the streets, if we can start cutting off the flow of people being removed because of mental illness and unable to pay rent, you know, basically unable to function properly. If we can stop those people from being put out onto the streets, we might be able to, you know, get a handle on it, like you said, Mike. But I don't know how those funds are going to be allocated. I don't know, you know, what kind of services are currently available for residents to receive mental health care prior to being evicted or put out on the streets.
Go ahead, Jake.
I was just going to finish by saying it's really complicated and it's a very difficult thing.
Yeah. I do feel like, you know, the sales tax raise is more of a treating the symptom of homelessness, not the root cause. And that's what we do in the West. I mean, that's Western in a lot of ways, not to pick on the West, Western medicine, Western society, that we're not digging into what the root cause is. We're just trying to fix the issue at hand and it is complicated. And I don't think there is an easy answer to what the root cause is, but I would just like to see us as a society really dig into that root cause so we can solve this. As Jake just said, maybe that is the way. I don't know, Jake. I haven't spent any time working on that either, but fix the cause so that the result isn't homelessness. And that's, I mean.
Yeah, I don't think the solution is to build more, you know, dormitories and get them off the streets. Like, I mean, I just don't think it's that simple. I don't think it's like we can shove it, you know, under the rug or whatever, to your point, Mike. I don't think building more stuff to get them off the streets to make everything look all hunky-dory is the solution. I really don't.
Yeah, that's a really good point, Jacob. I do feel like Denver has done a fantastic job of being a very beautiful city and avoiding any appearance that it's not. And this is new for us, right? We haven't had to tackle the issue of these homeless encampments, and it is incredibly complicated. And I think for those of you that are property management clients, we are dealing with this with some assets that we own, and we're dealing with it for our clients. So it is something we're aware of, we want to stay ahead of, and we want to do everything we can to collaborate on solutions that are long-term and that add value over time. But it is definitely, there's not an easy answer to that one.
Hey, Tony, real quick, before we move on, I do want to apologize to all the Californians out there that I just offended by saying, look what they've done to their own cities. For the record, I am a Californian, born and raised. So I feel like I have a little bit of ability to say that because that is where I'm from. And I watched it growing up, watched it get worse and worse and worse. Vincent Diorio just texted me, text in and said I'm a jerk. So thanks, Vince.
He might not be on this. He might not be on this webinar. He might have just wanted to share that with you.
Oh, that's true.
So good discussion on this. We have had a couple of questions come in, so I'm going to pivot to those, and then we're going to talk a little bit about the Biden tax plan, which I think is certainly on everyone's mind right now. The first one, though, is, what do you think is going to happen in light of COVID when we think about, and this is a little bit off of the topic for a moment, but I think it's probably on a lot of people's minds, is this flight to the suburbs. And, how does that impact path of development? It seems easier to build new hospitals and schools in the burbs, and people want to get out of dense areas right now. What are you seeing in that trend right now as we're deploying capital?
So let me say it this way. I think there is it's an ebb and flow of in and out. And we talk about this a lot in our investment seminars. So state to state, people moving state to state is migration. People moving from outside the United States into the United States is immigration. And regardless of where you sit on Trump's wall and, the southern border and all of that stuff, I can tell you that there's been lots of population statistics around that Americans, contrary to my wife trying to support population growth by having 4 children, most Americans are having 2 or less children, but our population seems to continue to grow. And population growth typically means economic growth. Now that's a very, again, broad stroke, but immigration has supported this economic growth that we have had. Same thing happens in Europe right now in Germany. In the EU, Germany has had a better economic growth than most of the other countries. And they've also had better immigration and population growth than most of the other countries. So these things do go hand in hand. Now, state to state, you have immigration, and people are flooding Colorado, at least have for the last 10 years. It's tended to slow down the last couple of years because prices have gone up. But look at where Jake lives in Colorado Springs. Why do you think Colorado Springs real estate is getting so much, is increasing in value? Because people are moving to Colorado Springs. Lots of people can't afford Denver anymore. And this is the immigration that we're having. Now you dig into the city. So people are still coming from outside into Colorado. Then you take a look at the city of Denver, and people are leaving the city and going to the burbs. Subsequently, what's happening? It's driving up the prices in the burbs right now. And Tony, I do think you will get the urban infill, the hospitals, the schools, as we discussed 15 minutes ago, and all of those things that are happening. And where is most of the real estate that I own personally? It's not in the urban core. It's in the burbs surrounding things like the Aurora hospitals that I mentioned earlier, surrounding things close to I-25, or if you look at what's getting built at Lincoln and I-25, or the mall developments south of Castle Rock, or the Gaylord out in between Denver and the airport. So we're moving our money there. And we've been telling people for a long time that if you own high-rise real estate in downtown Denver, sell those things and move the money somewhere else, because condo living, there's just better ways to spend your money, in my humble opinion. And that's not always the case, but again, broad brush stroke, that's what we're buying. We're buying single family homes, mostly in the burbs, or multifamily homes, but also again, in the burbs. And it's worked really, really well. And I don't think that's going to change anytime for us, whether you're talking Denver, Colorado Springs, Phoenix, and as we move into Salt Lake City and Boise and some of the other places that we're strongly considering. I think that's going to be a change. But to that question, I think people will move back into, as soon as this COVID thing is comfortable. There is something to be said for living in a high rise in downtown Denver. Right now, you can't use the pool and the gym and the bar and the social things. And if you have dogs, which everybody in Colorado besides me does, or you have kids, which I have a lot of those, You don't want to live in a high rise because you can't use any of the amenities. You can't go to the parks. So you want to go to the burbs. Well, as soon as that's over, I think people will trickle, assuming we fix this homelessness thing, people will go back into the urban core. I just think this is a momentary issue, not a long-term issue. And remember, the number one thesis of Atlas investment is 20-year picture. So I still like the 20-year picture. It just might be a little more painful for the next year or so in downtown than it is in the burbs.
You want to know something I would add to that? I'm going to try to be brief here, but so we can answer more questions. But one of the things that came to my mind while you were speaking, Mike, is how important it is to actually have somebody in the marketplace advising you as an investor, because we're having the exact opposite happen here in the Springs. We are having a ton of urban infill right now. We've probably got more units scheduled, more apartment units scheduled to be delivered in the next 2 years than we've had over the past 30. And I'm not exaggerating. It's unbelievable how many apartment units are being added to downtown Colorado Springs right now. And people are moving in. Like, the development in downtown Colorado Springs is unlike anything I've ever seen. Having been born and raised here, seeing very little change. And now we've got the Olympic Museum, we've got a new soccer stadium, we've got 3 hotels coming, like 4 hotels actually in the 2-year span. It's just unbelievable what's going on in our urban core here. We also have the burbs blowing up as well, but the Springs downtown is a great place to be owning some real estate right now.
It's funny, Jake, what you illustrated is that how hyper local real estate really is.
Exactly. That's what I'm saying. Yeah.
Yeah. We read these national statistics, and man, your point, Denver and Colorado Springs are an hour away, and it's vastly different because of how hyper local real estate really is. And I love that, Jake, that you really do need a local advisor. I mean, my last 4 purchases have been in Phoenix, and you know what? I don't find the deals. I trust our team down there to find the deals for me.
100%.
Well, guys, let's take a few minutes and let's talk about what we might expect under a Biden administration. So it does appear that Joe Biden will be inaugurated on January 20th and sworn into office, and we don't know how the Senate is going to fall. I think, to Mike's point, there's a chance that we have a 50-50 split in the Senate. So knowing that, really, when you look at just where we are as a nation, there just doesn't seem to be a mandate for anyone at this point. But Joe Biden has been somewhat transparent in what he'd like to do around tax policy. And some of that applies directly to how we think about real estate. So Jacob, take a minute and tell us what you've learned and your insights on what we might expect.
Yeah, so it's important to make a distinction here too on Biden's proposed tax plan while he's on the campaign trail and what he will actually implement while he's in office. So that's important. I want to make that very clear. What we're talking about today is his proposed tax plan while he was on the campaign trail. So I think that's important to consider. But some of the main gist of it is, if you're earning $400K or more per year, you're going to see some significant tax increases just across the spectrum on all types of income that you're earning. If you're earning I think it's over like $1 million from your long-term capital gains, they're looking at increasing that from a long-term capital gains tax rate from about 23.8 to up to doubling it almost to that almost 40%. So if you're making a lot of money, they are looking to increase taxes pretty significantly. They are also looking at going back to some Obama era tax plans for estate taxes and gift planning. So under current tax law, actually, I think the IRS just came out with their new estate exemption, which I think is like 11.58 mil for an individual. But the Biden administration is looking to bring that back to 2009 levels, which is 3.5 million. So significantly lower estate tax, or significantly higher estate taxes, and they lowered the gift amount a little bit there as well. The other thing that's probably most important, and I know Mike is going to be itching to talk about this, is going to be the step up in basis that they're talking about removing. And what we're talking about there is, as you invest in real estate, one of the main benefits is you get to defer your capital gains taxes as you proceed, whether you're using 1031 exchanges, you're using accelerated depreciation modules to your tax return in order to accelerate those tax deferrals. And what you can do is using the 1031 tax deferral exchange, you can continue to use that to buy like-kind property for your entire lifespan as an investor. And then when you die, your kids or your inheritors actually inherit that property, but they get it at what's called a step up in basis, which means they don't owe any of the gains that you've accrued over your lifetime. They buy that property at the value of that property at that day, basically. Now, if the Biden administration and our Congress and our Senate, chooses to do this, they could remove that completely, where the inheritor, while they still receive the property, they also receive all of that accrued depreciation or that deferred tax, capital gains tax, when they acquire the property. As far as the 1031 exchange itself as a vehicle, there hasn't been too much talk yet about that in particular going away. I know there's a lot of fear right now. I've actually seen it in my transactions with some multifamily apartments that are being delayed. The closings are being delayed because of fear of retroactive 1031 exchange bans. I don't know that I see enough public information about that would warrant such concern, but it is something to be mindful of. And then there's some other things in there, like they're improving child tax credits, which is a huge benefit to you there, Mike. Some of them are pretty big, actually. The child and dependent care tax, they've actually doubled the amount of write-offs. So if you're taking care of an elderly family member, they've more than doubled what you can write off on your taxes for that, which I think is a really good thing. That's the gist of it. There's more details, but.
I think you pointed out a couple of really important things. One is you campaign on one plan and you propose very different plans. It is the step up in basis is a big deal. And I think if we have clients that are planning around that now, it is important to be thoughtful on that. We're not CPAs. We're not going to give you tax advice. But we are going to call out the areas where we think you should get really good tax advice. And that is an area where you should get really good tax advice. And we're happy to connect you with people that can help with that. I do think 1031 is just a big issue. I mean, that's popped up a few times in the Q&A here already. What's the impact going to be to 1031? And Jacob, you hit on, man, we just don't know. It does not appear to me to be a high priority in the Biden tax plan, and is likely one of those things that you can make a little noise about, but at the end of the day is just easy to let go of that one for the much more higher impact changes that I think the administration will pursue.
I would say that while it is proposed, this is why that Senate race in Georgia is so important. And Jake and I spent some time rapping about politics, leading up to the election and then the election night, and talking about presidents. And his words were, "You didn't vote for either one of them? Who'd you vote for?" Because we were laughing about it. And I had told him going in that regardless of who wins president, my hope personally was that the House stays blue and the Senate stays red. That way, whoever wins, whatever tax plan takes effect, there either has to be compromise or there has to be stalemate. In the end, both are better for me personally than if it's all red or all blue. The way I say it is they just have to leave me alone. They have to leave my clients alone. They have to leave me alone. The 1031 exchange thing was probably the most concerning to me personally, because I have 5 houses that I want to sell and redeploy the money in 2021. Now, I don't think it was going to happen, but it is a way for our media and for opposing sides to strike fear into the rest of us, which worked because it freaked me out a little bit. Number one. Number two, the step up in basis is also something that I'm concerned with, but I'm young, not as young as I once was, but I have 4 kids. So I think I'm going to be okay there, but I know it really concerns my clients. The tax bill, I think the way it worked is the Obama era, the Bush tax cuts, which they're referred to from 2001 to 2003, lower taxes. They expired in 2013. Trump's administration redid even deeper tax cuts in 2017. I think Biden wants to repeal those. The personal tax stuff is only a few percentage points, still a lot of money, but a few percentage points. The big one is the corporate tax bill, going from like 21% to 36%.
I think it's 21 to 28.
Well, yeah, it's a big tax increase on the corporations. And I mean, my humble opinion is that wealthy people, smart people, wealthy companies, smart companies are always going to find a way to shelter their money, playing these almost shadow games with raising the tax rates a few points here and there. Not that it doesn't affect it. I just think there's a better way. And again, we're not, as a country, we're not getting to the roots of the issue. We're dealing with the symptoms, and I get frustrated about it listening to it.
There's a couple of things I want to go over real quick too. One of which I think will address one of Manish's questions here. Part of the Biden tax plan was to reestablish the first-time homebuyer credit of $15,000 that was passed in, I think it was 2009, where if you were a first-time homebuyer, you could deduct from your income $15K to go buy a house. So to answer your question, Manish, I think that will actually affect housing prices because it'll make it a little bit more attractive for people to buy houses. Mm-hmm. The other thing I was going to say, and this is just my opinion, so going back to Mike's comment about voting for gridlock, I'm actually pretty much on that train as well, mostly because of how I view the economy as a whole. I don't really view it as the exchange of goods and services, but I view it as people's ability to plan, which to your point, Tony, getting with a good accountant so that you can plan with changes not coming down the pike is really important. But I think when you change the rules of the game, you create a lot of unvaluable spent time by a lot of highly skilled and wealthy people who spend time trying to mitigate tax burdens instead of spending time trying to produce more value for society. Right. And I think changing the rules or having a regime change is actually just difficult in general, and I think unproductive when you go about making some really big changes. Now, I'm not saying we can't make changes here and there, but I like gridlock because what it does is it keeps the same rules going for everybody so that plans can continue to come to fruition and we can make future plans without too much change to those plans as well.
Jake, to that point, this year has been really interesting because typically this goes back to the migration and immigration that Colorado is experiencing. Typically in the wintertime, prices slow down in most places and Colorado. In presidential election years, man, the market a lot of times grinds to a halt because people want to figure out what's going on.
100%.
And it hasn't happened at all. No, not at all. I mean, you guys know prices are ridiculously insane. And it's December. Put a house on the market, it's gone in 3 days based on the price point. But we have had, let me say it this way. Our Q4 is going to be better, the best quarter that brokers has had this entire year. If you would have asked me that, I would have told you no Q4 would ever be Q2 or 3. COVID or no COVID, it would never happen. And I'm clearly a liar.
That's amazing.
Well, a few other things as we start to wrap up. If you have other questions, please put them in the Q&A here, and I'm just glancing at those. Lots of questions around in-migration. We hit a little bit on that. Thanks, Mike. A few questions on refinancing. Refinancing, everyone should be considering refinancing right now. If you haven't already done that, then you should, and just reach out to our team, reach out to your investment specialist or whoever you work with at Atlas, and we'll connect you with resources both on residential and commercial refinance opportunities. Rates on 30-year fixed loans are below 3%. We don't believe that rates are going to rise dramatically at any point in the near term, but they have hit historic lows, which I spent a lot of my career in the mortgage business, and we used to say, wow, a historic low, every 2 months. And
hey, Tony,
they just
can I add something? Can I add something to your point about the rate prediction?
Yeah.
If you look at Biden's picks for both the Treasury and for his economic team, you'll see a lot of people who are pro low interest rates over a long period of time, Janet Yellen being the primary one. So I think rates are going to be low for a while based on his cabinet picks.
Yeah, I agree with that. And I think that's going to support home values as well over time. So as rates stay low, not only do you have the opportunity to refinance, but it's also going to assist in affordability as we look forward. So yes, refinance, everyone refi, get in that game. I think all of us have at least, a handful of properties over the last year been able to refinance. The other thing I would just encourage you to do, because the question is also continues to come up, will there be a crash in the housing market? And so I want to just say a couple of things on this because I think it's really important. What happened in 2008 was not a typical recession. And I think it is the recession that we all have in mind because it's the one we lived through. And but what happened with foreclosure crisis and really the near complete implosion of the global economy was driven by practices that have not been in place over the last decade. And when you look at even particularly loans originated and homes bought from about 2008 until now, those are probably the healthiest loans that have been originated in the history of the mortgage business. So even though there is stress in the housing market and there is the possibility of a pullback in housing prices that's tied to unemployment and a broader recession because of COVID, it's very, very unlikely that we see a kind of foreclosure crisis that we saw back in 2008. Again, speculation just hasn't been as rampant. The ability to do stated income loans hasn't existed. We're just in a different position. And most home buyers had skin in the game. They were putting down payments on homes. They were required to prove their income. They were required to prove their financial position. So it's just a different game right now. So I want to kind of say like, hey, that extreme, the whole thing's going to implode. We're going to be buying tons of homes at foreclosure sales.
No.
I think it's unlikely.
Also to point out, Tony, it's also hyper local. This is again why it's super important. Real estate is a local business. And so when we talk about the real estate market crashing or even depressing in prices, we have to be careful about that because maybe that's true on a national average, but it may not be true of a particular market.
Yeah. And we saw that in 2008, but we saw more broad across the country impact that I think is highly unlikely in this scenario. So I think that's important. I also think just the laws of supply and demand come into play here. And we have not built enough homes, particularly in the Front Range of Colorado and in metros like Phoenix that have massive in-migration happening. There's just not enough stock. So one of the things that we look at very closely is what are housing starts looking like, not just permits, but what are the actual starts and what kind of inventory is being built. So there's a lot going on in that space. And we've got several questions around, should I buy, should I not buy? And Mike loves this question because he always has the same answer.
Buy.
So
hold. Yeah, a couple things for you. If you have a loan and you haven't refinanced, I just had a client. I actually have a call with him today at 11:30. He's got a loan on a 5-plex in Aurora with a balloon. He and I spoke last week or the week before, and I said, hey man, call your bank. They might be willing to do a loan modification. And he didn't even have to refinance. They did a loan modification for him that took care of his issues without having to sell or go through a full-blown loan refinance. So there are those options out there. Next thing I would say, we're talking about the in-migration. To tie that to politics, and I didn't hear anybody on a national level say this. During the election night, I watched Fox, I watched CNN, and I watched local to get a flavor for what everybody was saying. Now, here's the funny thing. Coloradans know this right now. Colorado, from a national presidential perspective, has voted blue, I think at least three, if not 4 presidential terms in a row, at least 3. Well, our population has blown up. Where are people moving from? Here from. They're moving from California. They're moving from Washington. They're moving from Minnesota. They're moving from Illinois. And to a lesser degree, they're moving from New York, very blue states. Take Arizona, where we spend a lot of time in. Where is the people that are moving to Arizona, to Phoenix particularly, where are they moving from? They're moving from LA. They're moving from Southern California. Arizona went blue for the first time in 3 or 4 election cycles, and Colorado's been blue, very solid blue, for at least 3 in a row now. And if you look at that and ignore the election stuff, but look at it from a real estate perspective, where do you think people are moving here from? They're moving here from blue states. And then we wonder why the state is going blue. Just saying.
Yeah. The other question that came up as we wrap up is what's going to happen with the American Dream Down Payment Act? This is actually American Dream started in the Bush administration in 2003. It ran out of money. gosh, I don't remember when it ran out of money, but it ran out of money and was not reauthorized. Cory Gardner was actually one of the sponsors of a bill in August to reauthorize funding for the American Dream Act. We don't know. We don't know what'll happen with that. It had bipartisan support.
Yeah. I mean, if I would speak to that, I mean, the Biden administration had a plan of reestablishing the first-time homebuyer credit. So I know it's certainly something they're interested in helping people buy houses. What form it will take is unknown.
Yeah, and to that point, Jacob, the American Dream Act was a fairly limited, I think, scope of impact, where a tax credit, so not just a deduction, but an actual tax credit for first-time home buyers, which that did happen post crisis in 2008, was incredibly helpful and supportive to home buyers. So that actually will have more impact than something like a down payment assistance act.
It does seem like an odd thing to do with real estate the way it is right now, doesn't it? I mean, back then real estate was blowing up, like crashing, like falling apart, burning, dumpster fire style. Right. And to do that kind of a move with a healthy real estate market is kind of interesting.
Yeah, I mean, I think the Biden administration is going to look at home ownership rates, which fascinatingly have climbed through COVID. And it's just going to be a really, really interesting market in 2021, what it's going to look like. So, well, folks, we are running out of time. We are coming up on top of the hour here. Thank you so much for joining us. We hope that you found value in this. We are going to send out a survey and ask who you liked better, Mike or Jacob. And I think I can guess how that one's going to turn out. But
one of us is getting fired. So you get to vote one person off the island.
Off the island, yeah. We should do that at the end of every webinar. So thanks for joining us. We really do appreciate it. We hope there's value in this. And we also want to invite you, if there are topics that you'd like to hear from us about those topics, just let us know. And we're happy to opine more broadly. We also send out a market report each week, and I encourage you to make sure you're on that distribution. Those came out this morning in each of our markets and are just loaded with meaningful and hopefully helpful information. Thanks, everybody. Have an awesome rest of the day.
Thanks, team.